All right, well, first of all, welcome everyone. Thank you very much for showing up early in the morning, especially on what's going to potentially be a pretty active day in the market. But what's really great about what I'm about to show you is I can just turn off my machines because of what I'm about to show you. Everything that's going to happen today, I've already got quote unquote figured out in terms of my positions with this particular edge that I'm going to show you today. Now, I am going to be talking about real trades and real trading systems because that's what we do. So I do need to put up this quick disclaimer. I'm not going to read the whole thing, but it's important to know that access to this information is for education and informational purposes only, and I'm not a registered licensed financial advisor. Now, I want you guys to get the most out of this presentation, so I'm going to try to force you to think a little bit to get started. Feel free to ask any questions during the presentation, but right now I'd really like you to answer this one, not only for me, but for you. If you could wave a magic wand and completely fix or dramatically improve one thing about your trading, what would that magic wand do? All right? I want you to be thinking about this as we go through our presentation so you can see how best what I'm about to teach you applies to you right now. So if you have an answer to that, and you all should, please put it in the questions box. That'll give me a sense of kind of what the biggest concerns are out there in the audience, and that will enable me also to point out in different places in the presentation where this might help you. All right, now there are some common answers that I would expect to get. Don't just copy them. You can see them. I have them down here in the kind of fine print, like stop exiting too early, stop getting scared out of trades, be more systematic, have a consistent equity curve, and some of those are coming up. Optimize exit, find trends, avoid volatility, be more consistent, finding entries quickly, stop exiting too early. Yeah, so you guys are saying the same thing. Stay longer in a trade. Stay longer in a trade. How many of you, now what I'm going to talk about today is not day trading, all right, but I'll get to that in a second. How many of you would like to be more systematic and be able to stay in your trade with more confidence, all right? For me, that was always really important, and that's why I'm saying now I'm happy if the market's volatile, but I'm not going to let it affect those things, and that's what I want you to have too. Great. So another thing I want you to think about, again, and if you could let me know, it will help me guide the presentation. What does an ideal trade look like for you? Does it mean, and I'm going to give you 3 answers and you could put 1, 2, or 3. Does it mean evaluating any and all charts meticulously for any number of patterns that are considered bullish or bearish, essentially reading the tea leaves of the market, which a lot of traders do. I do that too, but is that the ideal form of trading for you? Or is it scanning the market for a really specific pattern to trade with, I'm going to say discretionary rules, means it's not a black and white system, but you are focused on a specific pattern? Or 3, following a rules-based system with specific trading rules that determine all your entries and exits. All right, so if you had to pick one, which would be your favorite? Or which would you like to aspire to? All right, so I've got a whole bunch of 3s, great, because that's what we're going to talk about. Number 2, great, I'd say that's good too. By the way, I like to do all of these, but we're going to focus on number 3, so I'm glad you guys are in that camp. Now, whether you're in 1, 2, or 3, there is one thing you really do want to know, and I'm sure I'm not the first person to say this to you, but if I am, definitely listen to this because you're going to hear it over and over again as you start to learn more and more about trading, and that is, do you know if the odds are in your favor? And how important is that? Now, I'm going to give you a little quiz. You guys are being great on the participation, so I expect some good answers from this quiz. If I had a coin and I said, if it lands on heads, you make 19.1%. If it lands on tails, you lose 10%. So here's the quiz. How many times would you take that bet? How many times would you take that trade? If it lands on heads, you make 19.1%. If it lands on tails, you lose 10%. 100% all day long. Depends on the risk reward. Okay, your risk reward is 19 if you win, 10 if you lose. Every time, you do it 10 times, all the time. Right, great. All right, I got an audience here who really knows what we're gonna dive into. Now, the reason you want to do this all the time is because it's a coin. 50% of the time, over a large sample size, it's going to make twice as much as it loses. You can't go wrong with that. All right, it's not a trick coin. All right, as long as you do it enough times, you will win. All right, now this isn't going to be a huge presentation about math, but odds and what your odds are really important in your success in trading. And in this webinar, I want you to discover how you can systematically catch big trend trades without the frustration of analyzing charts. So how can I do that? How can I have you catch big swing trades and not have to analyze charts? Well, you don't even have to worry about charts with this. All right. Now, before you call me crazy, listen. In this webinar, you're going to learn how to systematically identify a small group of stocks with a condition that has consistently outperformed the market. This is going to give you that edge. Okay, this means we can identify a condition that leads to a positive outcome even before you apply any trading rules. Kind of like that coin example. All right. Now, the second thing I want you to learn is the trading rules that generate the winning trades that yield double the average of a losing trade. Right? Now, this is all great, but I know what every trader is concerned with. Oh, by the way, right, I forgot. When you double, when you have twice the reward on your winning trades as you lose on your losing trades, you only have to be right 33% of the time to break even. That's a pretty good deal. And in the markets, that's a really good deal. So the third thing I want you to learn here is how to protect your capital in down markets. Every trader has got to be concerned with that because 2009, QQQ is down over 50% from its high. Who knows how much you need to rally when you lose 50% of your portfolio. All right? If you lose 50% of your portfolio, you have to double your money, right? You have to do a 100% gain. Now, just to draw at a comparison to that, if you lose 10%, you only need an 11% gain to get back to where you were. All right? So big drawdowns are bad news. All right? Now, in this webinar, I'm going to show you a system that has outperformed the Qs. Now, the Qs are one of the best performing major U.S. indexes. They're up 205% from 2008. But the system I'm going to show you is up 740%. And we're able to do it because of this edge. Now, I know this all sounds good, and I want you to all be excited, but it's not for everybody. All right, this webinar is not for everybody. You guys have a full day ahead of you, and maybe this isn't for you, so I want to make sure that you're the right person for this. All right, this webinar is for you if you'd like to be handed trades that have a history of 2-to-1 risk-reward ratio. All right, this isn't about trying to figure out the markets with charts. This is for you if you're willing to hold trades for weeks or even months with very little management of stops and targets. So if you enjoy active day trading and that's really what you want to do, I'm not going to talk about that. This isn't about that. And like I said, I want this to be an incredibly valuable hour for the people who are the right people. Now, the other thing, despite the fact that I'm going to throw out really impressive numbers, this is not a get-rich-quick scheme. So it is not for you if you're looking for a get-rich-quick scheme. All right? So if you're not looking for that, then you are in the right place. Now, how many of you have never heard of MarketGauge? All right. As Dan just said, we've been in business now for over 20 years. We keep saying we're going to do some special stuff for the 20 years and just haven't gotten around to figuring out what we should do. It's been a great 20 years. I've been really fortunate. So just kind of a quick guide of where I'm coming from. My co-founder and partner is Keith Schneider. He started trading on the floor of the Commodities Exchange in 1977. He turned $10,000 into well over $1 million in 18 months, trading the gold bull market on the floor. So I was fortunate to have a really good mentor. Now, in the 80s, he went off the floor and built this company called MarketVision because he wanted to be able to trade more markets, and he loves technology. So this was one of the pioneers in trading platforms in the 1980s. Right? It later actually became part of the Reuters platform. Now, I met him in 1990. When I graduated from college, I went to the floor as his assistant, and within a couple of years, I had my own seat on the floor, and I was trading commodities there too. But in the 1990s, commodities, to put it bluntly, sucked. They dried up. And I always loved stocks. Keith loved stocks. We both loved technology. So we had an opportunity to go, quote unquote, upstairs to Millennium Partners, a multi-billion-dollar quant-based hedge fund. And there we managed monies based on neural networks and computers. And we learned a ton about how the quote-unquote inside does it. Now, while we were there, we built all these cool tools, and other people wanted them. So MarketGauge was formed so we could deliver those tools, mostly to the institutions Dan was talking about earlier. But when the internet came around, we were able to kind of shift our mission to focus on the active traders. Being a part of big platforms was no longer the way to go, and we went kind of independent. So right now, what we want to do, and we continue to do, is develop easy-to-execute trading strategies and tactics and systems for our own trading, and we make them available to active traders and investors, maybe you, who want to become more successful in building their wealth from trading. All right, so what's the edge? The edge that I'm referring to is based on momentum. And momentum, when you know how to use it, works, even with very little help from a system. Now, I'm going to show you what we've done, but before I even ask you to believe what we've done, I want to show you that this is not something that we've just pulled out of thin air. The pros and the academics from the best institutions have proven this concept numerous different ways. One really easy way to demonstrate this is by this book called What Works on Wall Street by James O'Shaughnessy. He's not just an author. He manages over $6.5 billion in assets. And it's a 600-page book full of all kinds of systems that he's back-tested in the markets. And one of the best conclusions he came to, not because I liked it the most, but the most successful conclusions, was based on the fact, and I quote it here, that over 6 and 12-month periods, winners generally continue to win and losers generally continue to lose. When I say momentum, that's what I mean, all right? The stuff that's going in a direction in a meaningful way will continue to go in that direction, all right? So summarize a different way, price momentum proves to be an especially good way to identify both those stocks which go on to perform well and those which go on to perform poorly, all right? So it's not just him. As I said, AQR Capital, another huge firm, they manage $175 billion in assets, put out a research paper called The Case for Momentum, and they did it along with Tobias Moskowitz, who's a professor at the Booth School of University of Chicago. Okay, you don't get better credentials than that. And they came to the conclusion that evidence shows that assets that have performed well over the last 12 months tend to do better over the next 3 to 12 months. You see any common themes here? 6 to 12 months, all right? Now, what you're going to learn in this presentation is we found the same thing. AQR broke it out this way, and this is a really good illustration of it. If they looked at stocks, the whole market, going back to 1927, and they looked at 12-month performance and how those strong 12-month performers, or how the last 12 months affected or led to the next 12 months, all right? And they broke the market into 5 quintiles, or another 5 groups, in other words, a quintile. So the way you read this chart is that the strongest 20% of the market averaged about an 18% return. That's since 1927. This is a long time. And not only did it average 18%, but it outperformed the market dramatically by about 5 percentage points. All right. Now, that alone is powerful, but if you think about if that's really true, if that's really a edge that you can have, then most likely the opposite would be true. And in fact, it is. If you go look at the worst performing 20% of the stocks, they only averaged 5% returns, all right? That means that your best performers almost more than tripled your worst performers. But not only that, your worst performers underperformed the market dramatically by over 5 percentage points. Let's call it 7 percentage points. So here's the thing to take away from this presentation. If you don't take anything away from this, too many times you hear people say buy low and sell high, but that does not mean buy the crappy stocks and hope they're going to be the good ones. If you're doing that, you need to be a fundamental analyst who really understands why the stock should turn around. You don't just buy something because it's going down. But the fact of the matter is, if you know how to do it, you can pretty much buy something almost just because it's going up, because leading stocks outperform by a really large margin. All right? So you have an edge. All right? You can have an edge, and you can have this edge, and it doesn't need to be defined by a chart. I've just shown you that. I've shown you how the pros and the quantitative traders beat the market simply by taking advantage of rules that put the odds in their favor. That's what we saw happening at this huge hedge fund. Guys who didn't have anything to do with charts, they didn't care about charts, they programmed the computers all night long, and then they let them run during the day. And it was all based on odds and edges. Now, you can do it too. And that's what I'm going to show you here today. I'm going to show you a system we call the NASDAQ All-Stars, and we figured it out. Now, it wasn't easy, but here's what it looks like. In 2008, if we had started at the 0 mark and you traded the NASDAQ All-Stars, you'd be up about 740% right now. If you just put your money in the Qs, you'd be up about 205% right now. Now, I ask you, which line would you rather be trading? Okay? Now, the problem with the AQR research was that in order to execute that, at first glance, you would need to buy 20% of the market. Now, that's not very practical for you and I, right? It's not very practical for you and I, but institutions could do it, and they have been doing it. But we figured out a better way. And we've been able to figure out that way because we've got a lot of trading experience, and we also know how to design a system, and we built a special momentum indicator, which I'm going to talk to you about in a minute, and we have programming skills to do the back testing and figure it all out. So when I say it's a lot of work, the edge may be simple, but actually getting it and converting it into a trading system is not necessarily that simple. And we didn't convert it into just one, we converted it into 3. And here's where it all starts. You need to have an ability to have a select group of instruments that you can say, I am only going to focus on these instruments, just like AQR did when they went back and covered the whole market back to 1927. But here's the great thing that we discovered. You can use NASDAQ 100. There's your universe, and it's a great universe. These stocks are already market leaders, and they have great institutional following, so that means they can really have these persistent trends. Not only that, they're really liquid, and they're good quality companies. They're not likely to go bankrupt, all right? Plus, a lot of them have good options chains. Now, I'm not going to show you how to trade options, but these are all benefits of just focusing on the NASDAQ 100. So, again, big takeaway here. I just told you, only using NASDAQ stocks, we were able to generate a return of 740%, triple the Qs, by only focusing on these 100 stocks. Now, when I first started trading, I thought, the great ability to trade would be to figure out the charts and find that new Microsoft or Amazon or Google. And what I quickly learned is you have to scan through thousands and thousands of stocks. You have to make all kinds of decisions. Narrowing them all down to that right one was, it's almost impossible, right? So right now, I've just narrowed your universe down to 100 stocks. Here's the next step. Remember, where was our edge? Our edge is in identifying the stocks that have the right momentum, okay? The right momentum. So we built an indicator. We didn't give it a fancy name. People have told us to change it because it's a boring name, but it's called the Trend Strength Indicator, TSI. And that's what it is. So that's what we called it. And the TSI identifies the best trends to own for the coming weeks and months. All right. I've already told you that 6 to 12 months is an important time frame. We use this indicator doesn't use just one time frame. All right. It's a weighted indicator that measures momentum over several time frames, and it comes up with a number. All right. And that number tells us how strong the trend is. Now, the second secret here to building this system is that it's not just having strong momentum that you want, because it's not just how much has it gone up. What do you want? You want the leaders. Why? Because the market tends to continue to follow the leaders. So the TSI is our strength indicator to be able to simply rank the NASDAQ 100 and identify the ones that are the strongest. So the stocks we want to trade flow right up to the top of the list, and that's all it takes for us to identify which stocks we want to focus on. All right, does that all make sense? All right, you want good momentum, and then you want the best momentum in a group that you can define, right? All right, so we have 3 systems that we've built off of this. I'm going to really focus on one, but I want to let you know that there are 3, and they have all worked really well. I'm going to focus on the monthly. So the way the monthly works is we hold positions for big swings over several months. The average hold time is in the 80-day range, 81, 85, I think it might be 85 now. All right, and then we have a second system, which we call the active. Now the active looks to catch swings lasting several weeks, and its average hold time is only about 24 days. Right? So if you're an options trader, that might be a really good time frame. Right? If you're 81 days, you got to be really good at options to take advantage of that. So the key here is that both of these systems are trading the same stocks. Now, if you take those and you combine them, it actually creates an even better return with less volatility. So when you see this chart that I'll show you several times, it's simply these 3 colors are the 3 variations. The blue one is the monthly, the red one is the combination of the 2, and the yellow one is the active. And green is the Qs. All right. So you can see that at different times between the 3 systems, they all have their strengths and their weaknesses, but they all totally crush the Qs. So at this point, you're probably wondering, well, what are the rules? How do we actually do this? All right. It's really straightforward, because the power of being able to actually execute a system comes from how simply you can do it. So we've been very focused on that. At the beginning of each month, we determine the top 5 stocks to trade. How do we do that? We do that with the TSI. Whoever's in the top 5 TSI ranking, those are our 5 stocks of the month, so to speak. For our trading system, we take profits using money management targets. We're not looking at a chart and saying, based on this pattern, based on this moving average, none of that. It's purely based on the math of money management. And to completely exit, we could either exit because we get stopped out, so we're protecting our profits, we're protecting our capital, or we get rotated out. So rotated out means that a stock at the end of the month has lagged too much and a new leader has joined the top 5. Now it's a little more complicated than that, but I'll get into that later. Essentially, when a leader is no longer one of the best, we drop it. All right, so you can get rotated out, which means that we may get out of a trade before it hits a target, but well over any sense of a loss. All right, now the other thing that we do is we enter new leaders with pretty wide stops. We want to give the leaders room to roam, because they don't go straight up. They will have their ups and downs, but when they get going, as you're going to see, they can really take off. Now, in the active model, again, as I just said, we trade the same stocks. Those same 5 stocks are what we focus on, but we do it with a shorter time frame in mind. We're more concerned in the active model with identifying short-term volatility to the downside that we can take advantage of. So we get a pullback, and then we have a reversal indication that's actually based on our proprietary triple play indicators. So if you're familiar with MarketGauge, you might have heard of triple play, and we use those algorithms to determine when the momentum is turning back up. All right. Now, if you are a MarketGauge member and you are familiar with triple play, we're not using the daily triple play. All right. So we're able to really time our way in more quickly, and this enables us to basically say, okay, last couple days or within a daily time frame, this leader has pulled back, but now it's turning and it's resuming that leadership, and it's time to get in. All right. And with the active, we have much tighter stops, and we have quicker targets, right? So everything's just compressed. There are certain market conditions when you want to be more active, and there are other market conditions where you just want to sit back and let the thing run. So 2 different models, similar concepts, and it works great. Now, I'll give you more details in just a second on the rules and how you would actually execute it. But before I do, I want to give you a quick sense of what I mean when I say a big swing trade, because I want to make sure we're on the same page. So I went to our portfolio, and so our members can see all our past trades, and I just went through and picked out some of these are recent. Some of them were actually still in. We're still in NVIDIA, up 108%. Anybody see that thing last year? That's what we call a leader. I wish they were all like that, but I won't tell you that they are. That's our best trade, maybe ever, but it wasn't hard. STX up 36%, MU up 39%, AMAT 37%. Look, we don't always make money. 15% loss in NXPI. Now, I will tell you that 15% is our stop. So if we hit the 15% level, we're out. All right, that's it. So that one got stopped out. But our average loss is much better than 15%. And why? Because here's another example. Ulta, we got out of that at 6%. Now, we probably got out of that because it rotated out. It just didn't go. Something took over, and we kicked it out. Win, up 20%. Amazon, up 40%. Mattel, up 20%. All right, so when I say big swing trade that could take over the course of 80 days, this is what I'm talking about, right? If that's not good enough for you, then again, I want this to be the right thing. That's what we're doing, all right? Over and over and over, we're churning these out. Now, on the active, as you'd expect, we're in and out more quickly, so the losses are going to be smaller, and the wins are going to be smaller. So here's what our idea of a quick swing trade is. AAL, up 3%. NetApp, this is actually supposed to be 18.1%. MU, lost 4.9% on it. MU, we made 22%, right? Now, the reason we can make 22 on MU, Micron, is because in this model, we have a trailing stop. So if it just keeps going, we'll let it keep going, but it's a tight trailing stop. So NVIDIA, you can see we traded this one in the active model too and plucked out an additional 24% at times, and another time we took a hit of 5.8%. Ulta made 7.8%, right? So you can see if that's your idea of a nice move, again, over the course of what is most likely going to be a couple weeks, then that's what we're doing, all right? Make sense? All right, so what do you guys think? Does that sound good so far? Because now I want to go into how we actually trade it, all right? So remember the question I asked you earlier, the coin question, all right? If you had a coin that made 19% and lost 10% based on heads or tails, how many times did you trade it? Well, as you can probably guess by now, I didn't make up 19.1%. or 10%. As it turns out, over the last 182 trades that we've done with this system, those are our numbers. And we have a win rate that's better than a coin, 56%. So that's how we're getting the numbers that we're getting. All right. Now, I would fathom to guess that some of you out there who are familiar with systems, or some of you who are looking at this and saying, I have to hold these trades. I know I'm going to make, 20, 30, 40, maybe I'll even get to the next NVIDIA, make 100%, but I have to hold these trades for a long time. I'm going to have to hold them through earnings, right? So has anybody been thinking in the back of their head, what do they do about that? Well, I want to show you another secret about momentum. And I wish I had pulled the research report that made me go back and do this research, because there's a research report out there that came to a similar conclusion that I'm going to show you. So the hidden secret about momentum and gaps is that despite the common fear about holding positions for weeks or months, leading stocks have a huge statistical edge in your favor, all right? And in our trades, the way we find the leading stocks, 71% of the gaps that are bigger than 10% were in your favor. All right, so I know as a trader, it's easy to go home and say, I don't want, I'm long, what if it gaps against me? How differently would you feel if you could say, hey, this thing might gap tomorrow because it's earnings or because the market, but almost 3/4 of the time that happens, it's going to be in my favor if it's a huge gap. Now, if we do lesser gaps, it's still in our favor, but the odds are even bigger the bigger the gap, right? So talking about odds, now this is not a system that I would recommend, but if you had a system that you knew the stock was going to gap, and if it gapped up 10% or more, you'd be right 3/4 of the time. How many times would you do that trade? That's even better than the coin, right? That's a 3-to-1. All right, so the gaps, and again, here's a takeaway, even if the whole system isn't what you're interested in, momentum tends to get the benefit of gaps. And it's, I think, our human nature to think that as a stock gets stronger and stronger, the fear is that it's going to gap against you, but the facts are it's going to gap with you. All right? That's how the numbers work out. And as I said, it's not just us. The other research report that made me go back and say, let's look at our trades, because it seems like we're on the right side of these gaps, but don't know. And sure enough, it was even better than that. But this guy was saying that he was focused on earnings, and he said earnings reactions are much more skewed to the positive side in stocks that have positive momentum. And there are all kinds of psychological reasons behind this. And the psychological reasons behind momentum, I'm not going to go into it. But I wanted you to know that this is a statistic that works in your favor. Now, the next thing, if you are familiar with trading systems at all, you're probably wondering, okay, I know it all sounds great, Geoff, but what about the drawdowns, right? What's a drawdown? A drawdown is the value of your portfolio at its highest point down to its lowest point before it recovers. Now, as I've already said, the NASDAQ 100 in 2009 was down 55%. All right, that's cut in half. That means you have to double your portfolio. You have to double your portfolio to get back where you started. With the All-Stars, let's focus on the worst case, 22%. So the worst drawdown in the All-Stars has been 22%. All right, that's half of the drawdown of NASDAQ. Now, in part, that's because we don't just buy the best and hope the rest is going to work out. I'm going to show you how we protect our capital. And yes, we have stops, but it's more than that. All right, and that leads to a much lower drawdown, and that's hugely beneficial when the market turns around. All right, now I have a question for you. How would you use a driverless car? This may seem like a random question, but it's really not. It has to do with the emotional struggles of actually using what I've shown you. And this is why. I'm going to give you 3 choices. Again, you tell me 1, 2, or 3 how you would do it. Would you just specify the destination and let the car do all the work? And you can just relax in the back seat. You're not sitting in the front. Or will you sit in the driver's seat ready to take over control when you doubt or disagree with the car's decision? Or 3, would you drive it manually but let the car drive on autopilot when you want to brake? All right, so basically what am I asking you? 1, you don't want to do anything, trust the car, let it work. 2, you want to trust the car, but you want to be able to take over. Or 3, you're not trusting the car until you want to brake and it's a matter of convenience. All right, now this is going to be a reality really soon, right? I think it is. I mean, some people would argue it's already here. I use it for target practice. Okay, so I guess you don't even use cruise control very often, Simon, but I like the answer. All right, so I've got 1, 3, drive it manually. I've got a couple of 1s, a lot of 2s. All right, so what does that tell you about yourself? It tells you that you definitely have a propensity, I don't want to call it an issue, to maintain some form of control. All right. The same is going to be true for your trading. All right. The same is going to be true for your trading. So whether or not, again, this is the right approach for you as you're trying, almost all of you said you wanted a system that gave you exact entries and exits at the beginning of this webinar. But that same percentage of people is not saying that you would pick number 1. And you almost need to be a number 1 to really make that completely automated system work for you. I'm not saying you can't use number 2, but if you struggle with determining your trades, when to get in, when to get out, and it's in your head, it is in your head. All right, so just know that. Just know that. All right. The reason I asked you that question is because as a trader, you have that dilemma right now, and I'm giving it to you. I'm going to force you to make that decision because the NASDAQ All-Stars trading system gives you exactly the same thing as a completely automated car. It tells you exactly where to get in and exactly where to get out. You don't have to look at any charts. All right, and it produces results that look like this. Now, for the number 2s out there, the other thing that we've enabled you to do is we've enabled you to just say, you know what, when I want to get into that blue line, just tell me how to get in and make my portfolio look like the blue line. And if I want to get out, tell me how to get out, and then I can put on the brakes. How does that sound? All right. So as your trader's dilemma, here's what you have to decide. You can follow them all as they've been designed. You could take the signals that look good. You could use it as an indicator to determine which stocks you should be watching for your trade setups. These are all ways you could use this. Or as I said, I should add a 4th one. You could only be a buyer in here, and you could, on pullbacks, decide you're going to buy more here if you wanted to, and you're buying a portfolio of stocks. Now that portfolio is only a few stocks, and I'm going to show you what that is and how we determine it right now. All right, so it is a reality. You have you can have the power to trade the blue line. And the way we do it, as I've said, is at the end of the day, the end of every day, we determine the TSI. The TSI gets ranked, and we focus on the top 5 stocks. Now, we only focus or make changes to the top 5 stocks at the end of the month. So there really isn't a lot to do. All right, unless you hit a target, unless you get stopped out. All right, so the TSI gets calculated at the end of the day. And on that last day, we look at what the 5 stocks are, and those are the stocks that we're going to focus on in both the monthly model and the active model. And when we enter new positions, we enter them at the market open on the first day of the month. All right, that's how we get into new positions. Now, there is a way to start at any point during the month as well. Now, one of the huge things that we figured out, however, was you can't just buy and sell every time a stock goes in and out of the top 5. If you do that, you'll get chopped to bits and it'll be frustrating. You have to let the stock fall significantly out of the top 5. And so we have an algorithm for that that's a little more involved than what we'll show you here. But all you have to do to manage these positions is simple stops and simple targets that are based on math, not based on the charts. So you know exactly where they are. They don't change much. Now, how do we protect your capital? Because that drawdown number is really important. First, we do use simple stops and targets as I've already said, okay? But the other thing that we do that I haven't seen done out there anywhere is, and that's probably because we have the TSI indicator, is that with the TSI, we never enter a trade that has negative momentum. So if the TSI is not positive, we don't get in. That prevents us from being a buyer as the NASDAQ 100 stocks are all beginning to roll over. All right, there is no fun and no pride in buying the best stocks in a group where they're all going down. It just doesn't make any sense, and our research and our results have proven that it doesn't make sense. All right, now the other thing we do to give us a boost and potentially even make money in down markets, if we have a big downtrending market, like 2008, we'll go short using the PSQ ETF. And that'll enable us to potentially make money and make up for some of the inevitable losses that we will have as the market starts to roll over initially. All right. Now, as I said earlier, the active trader system has tighter stops, so that'll get out even quicker. Sound good? All right. So that's how it all works. Now, if you're interested in being able to execute this, I have a really special offer for you today. Now, normally, and if you were to go to our site, you would see that you would only get the All-Stars monthly system, not the active, for $1,500 for a year. Now, what does that mean? It means with this system, we will send you automated alerts. We'll give you access to a portfolio so you can see all the stocks that are currently being traded and the ones that have been traded. You get a weekly report, so it gives you kind of the condition of the stocks that we're focusing on, and a monthly live coaching, and we have live support. So what does an alert look like? An alert is, if you opt in for the text alerts, will look something like this, really straightforward. I just took a snap of my phone from a trade from a while ago, and you can see the model bought long ATVI 134 shares at 35.61. Has average range in there to let you know kind of what the volatility is going to look like. All right, so it's that straightforward. You'll get the same thing as an email. All right, then you go into the member area, and you'll be able to track what the holdings are. Now, I've grayed out the details here because I don't want you to focus on individual stocks, and this is also from a long time ago, so I don't want anybody buying this, looking at these and saying, oh, I should buy these. But I want you to see what it looks like inside the portfolio. You'll know exactly what the entry price is, the last price, how much it's moved, what percentage of the position is still on, so you know exactly where we are. You'll also know what the current stop is and what the next target is, so you always know exactly what's going on. All right. You'll also know where it is in terms of the targets that have been hit. All right. So everything is completely transparent. Now, the other thing that's really cool about the way this model works out, we didn't plan it this way, it just happened to work out that way, is that, as I said, at the end of every month, we do a reassessment of the 5 All-Stars. So we're able to hold a live coaching webinar every month where we can review the current trades that are coming up, the existing trades, any questions you might have. You have direct access to us live, and it's totally recorded. All right, I mean, it's all recorded. In fact, we just did one yesterday. All right, so you get the All-Stars monthly trading system. Now, the other thing that you're going to get, which shouldn't be overlooked, is you're also going to get the TSI ranking for those top 25 stocks. So basically, you will know which are the strongest quarter of the NASDAQ 100, and you'll know whether or not they have strong TSIs or negative TSIs. It's a great way to find trades just for your own trading. It's a great way to get a sense of whether or not the NASDAQ is really strong, or you can see that, you know, the top 25% of the stocks could be turning negative on TSI, and you would know that before most people would know. All right, so you'll have access to that TSI indication. Like I said, it's just the value you want to see, how high it is, and that it's positive, and which ones are ranking how. All right, really straightforward. Now, as a result of being part of this webinar, I'm also going to give you a bonus. And that bonus is that I'm going to give you access to the active trader system as well. All right, so you'll get both systems. Now, if we sell this on its own, it would be worth $1,500 per year. All right, so for the more active trader, that'll enable you to wait for pullbacks. It'll enable you to enter bullish trends, but not necessarily just because they are at the top of the list. And it'll also enable you to trade with tighter stops and quicker targets. So some of you, if you're an options trader, this is maybe it's a more palatable way to kind of get your feet wet. Right. Now, the other thing that you're going to get is a bonus trade tracking software, and I'm going to show that to you in just a second. And the reason for that is that most people, I believe, who want to succeed in trading can. So if you have a real desire to make money in the markets, you can learn how to do it. But it does take discipline. All right. It takes discipline and hard work. All right. Unfortunately, even people who get as far to be somewhat successful, experienced traders, often wind up failing due to poor or neglected position sizing. And they just don't focus on the risk management. So we made a really conscious effort to figure that out too. The first way that we've done that is to make sure that you're able to get started really simply and in the right way. All right, what do I mean by the right way? So when you get started with this model and you want to replicate the blue line, this is exactly how you can do it. We have a real-time calculator that updates every day. And again, I've grayed out the symbols. So you're not focused on saying, oh gosh, this is what they're in, I'm going to go run out and buy this. But this is in the members area. And let's say you were to start today. You would come to this page, and for every $5,000 you wanted to allocate to this particular portfolio. Now, I call it a portfolio, but what I'd really like you to look at this as is not, hey, I have to take my whole account and dump it into this. No. Think of this as if you could have bought a growth stock in 2008 and had it be up 700% right now. Wouldn't that have been a good deal? I mean, who wouldn't want that? And not only that, you wouldn't have had the volatility of most growth stocks because your biggest drawdown is only 22%. Most stocks have drawdowns that are big, 50% or more. all right? And you've got 5 positions, so you're diversified. So how do you do that? Well, this is how you do it. So if you, instead of buying $5,000 worth of an individual stock, you'd break your $5,000 up into 5 positions, and those 5 positions, you would buy this number of shares. All right. Now, why are we being specific about the number of shares? It's because if the portfolio currently has, say, 50% of a position, then you're only going to buy 50% of the model portfolio's position, and you're actually going to hold cash, right? So right now, if you were to be a buyer of our portfolio, you'd actually have 29% in cash. Now, you're going to be really happy about that when the market pulls back, right? Because when the market pulls back, you won't have 100% exposure, but you're still exposed to the best stocks in the NASDAQ 100 right now. How do you do it? I need 12 shares of number 1, 31 of number 2, 2 of number 3. Does that make sense? For every 10,000, every 5,000. So if you wanted to put 10,000, you just multiply by 2. Now we also have a calculator that on the website that you can download that'll give you this information for any number. All right, but it's that easy. If you wanted to pull the plug and sell everything because you think it's time to sell everything, and then on the next correction, you want to get back in, all you have to do is come to this, and you'll know exactly what to do. Does anybody have any questions about that? Because this is really powerful, and it's really important in terms of getting started. All right, it's really easy to do. And that means that if you follow this, you will have the right position sizing. You don't have to figure it out. All right, and the risk management with our stops and targets is all built in. So with this ability, you can now trade this blue line. Now, I'm not really encouraging you to get in and get out and try and buy support and resistance of it, but you can start small and know that you'll be able to add to your position in a way that replicates the blue line. Now, once you have your positions, if you want to really be meticulous about it, you can. We've got a portfolio management piece of software. So all you have to do is fill out the what you're doing down here, and fill in the current price, and it will keep track for you of what your initial capital is, your current capital, your P&L for each one of the positions, and your cash position. All right. This is like being able to run your own little fund of 5 stocks, just like a pro. All right, so let's review quickly. The relative strength-based strategies have been proven by Wall Street veterans, and all we've done is make them better. All right, we've done it by having a proprietary TSI, also by taking care of not just being a buyer because it's the best, but also because it's got the right measure of momentum. And we protect our downside and leverage the ability to do well in down markets, because now we have ETFs that will enable us to go short. All right. At the end of the day, we're looking to catch big swing trades and quick swing trades in these specific stocks that are driven by persistent trends. Hopefully you can see how this is only going to take a few minutes per week, all right, because both models can be traded based on end-of-day data, although the active trader, we will give you intraday alerts. And those adjustments come from text, if you opt into text, and email. And we'll email you every day to make sure you know that there's nothing to do. For the monthly, the orders are executed at the open on the day after, so you never even have to be watching the markets during the day if you just focus on the monthly. Right? And the model portfolio is completely transparent. It tracks everything that you need to know. Now, I would not put this next screen up in an environment where I am not able to say that every single trade that has come through this system has been taken. We don't pick and choose which of the stocks we take. That's why limiting our universe to the NASDAQ 100 is so important. So going back to 2008, the power of this is also in the compounding. So if you had started with $5,000 and not including commissions and slippage, you had continued to let that grow, right now it would be worth $42,000. If it was $10,000 you started with, it'd be worth $84,000. You can see the math. $25,000 grows to $210, $50 grows to $420, and $100 is an even bigger number, $840,000. And I used the monthly number because that's the easiest. The combined is actually a higher number. All right. So whatever suits your style. Whatever suits your style. Now, if I could just summarize it, you're going to get the monthly trading system. You're going to get the TSI ranking for the top 25 stocks. You're also going to get the active trader system, which is $1,500. You're going to get the trade tracking software, which is $200. All of this is $3,700 in value over the course of 1 year. Right now, I told you earlier I want to do something really special for you because of this MarketFest. So normally, this would be our special offer would be $997 for a full year. And we even have an upgrade deal where you can get $1497 for 2 years. But because this is a kind of special speaker event, I wanted to do something completely different. All right? We're not going to ask you for a full year commitment. In fact, we're going to give you the opportunity to try it out for $97 a month. But I'm going to make it one step better, because if this is the way you think you'd like to build your wealth, then I want you to be able to try it for the first month for only $37. All right, so $37 and then $97 a month. You can't find this on our website. All right, you need to go to MarketGauge.com/MarketFest 2017. Now, I do want to warn you. We do have a 100% performance guarantee, right? That performance guarantee is that if you purchase it today and a year later, this system has not been profitable, then you'll get the next year for free. Now, why am I saying I need to warn you? Well, we don't usually sell this on a monthly basis. And the reason we don't sell it on a monthly basis is, quite frankly, we want members who are really committed. Kicking the tires in this for a month, really, it's going to get you to see how it works and what it's doing, and you could play with it, and it's a really inexpensive way to get started for sure. But the value of this is really to sit back and say, you know what, I can see how this would enable me to have a completely different trading system. If I'm a day trader, this could be my long-term plan that I don't have to manage. If I like to swing trade, then I can just let this do its thing, and I can also use the signals that it has to know which stocks I might use in my own trading. But the value of it is that you really let it do what it does best, which is to make big swing trades over long periods of time. So that contradicts with a monthly subscription price. But I wanted you to be able to get an offer that we just don't do. So if you'd like to try it out for $37 for the first month and then $97 a month after that, now is the chance. This is a limited time offer, and we will also honor our other special offer that we do for webinars. Now, I haven't done this presentation probably in 4 months. I don't know when I'll do it again. But if you are a member of the monthly deal and you call us up and you say, hey, I was on that MarketFest webinar. I know your website says that it's $14.97 for the year, but I want the $9.97 deal. We will upgrade you to that. All right, so this is absolutely the most insane way to get started with this, but I don't want you, as I said, to get started if you're not really thinking, this is great. I want to build my wealth over a long period of time. If you're thinking, I'm going to try and get a bunch of quick hits off this thing in the next 2 weeks, I don't want anybody to be disappointed. All right, so $37 if you go to MarketGauge.com/MarketFest for a limited time, and that limited time is like 24 hours. There's a countdown timer on the page. So hopefully you can see how this is unlike any other service you'll find out there. All this is not only back tested, but we've been trading it now for about 2 years, and the results have been just as good as all the back testing. It's 100% mechanical. We are not at the end of the month getting together as a group and scratching our heads and saying which one should we take. Right? There are rules to let us know how far out of the top 5 it's got to be in order to get in. The portfolio position sizing is all based on having a well-balanced portfolio. The stops and targets are all based on math. They are not based on charts. And therefore, it enables you to have a professionally run, we call it a portfolio, but it's just a position of 5 stocks. So you're diversified and you're completely systematic in terms of following momentum. And the whole thing is completely transparent. So you're going to learn a ton about how to trade systematically, and you're going to have a system that has really knocked the cover off the ball in what other traders have found to be a very difficult trading environment over the last decade. All right, MarketGauge.com/MarketFest 2017 will get that. If anybody has any questions, I try to answer them all as I was going through, but now would be the time. I think I have just a few more minutes, and then it's going to be time for your break and the next presenter. And I want to thank everybody for coming out. I hope that even if you decide that this particular approach isn't for you today, that you've learned how powerful and statistically based momentum is. So good question, Mark. When you back tested this, did you use the database that contains all the stocks that were in the NASDAQ index at the time? Yes. And that's why we only went back to 2008, because it became more and more difficult to get the accurate data going further back. We would like to go back further, but at the time, which was like 2014, I think, when we were doing this, we just wanted to get back into the great financial, what do we call it? I was going to call it the Great Depression, but the financial collapse, so that we could cover that time frame. But yes, we were careful to make sure we had the right stocks. Our largest, so question, what should we expect for a drawdown? Look, our largest drawdown has been 22%. I think in terms of volatility, you should be ready to expect 10 or 15% if the market rolls over. As I said earlier, I won't tell you where our targets are because I don't want to give you all our math. I'll just be honest. You'll know that when you get into the product, but our stops on the monthly model are 15%. Now, that doesn't mean you couldn't gap through it, and that has happened. But as I said, the gaps are actually statistically in your favor. All right. All right, so Nancy, you're saying, are you signing up for $9.97? When you sign up right now, you're going to a page that has a special offer that is $37 for the first month, then you'll be charged $97 a month after that. If you would prefer just to get started at $9.97, you can give us a call at 888-241-3060, or you can get us in chat at the bottom of the sales page that I'm sending you to, and we can figure that out for you. But I will honor the ability to upgrade at any time. Mark, you will not. Mark, you're saying there's a website called premiumdata.net. I'll check that out. If you're suggesting that they'll have the data we want, that would be big help. will you get the TSI indicator? You will not get the formula for the TSI indicator. I mean, that's like our gold right there. You will get the results for the top 25, okay? I'm curious why the top 5 decision is made the first day of the month. That's a good question, Michael, because it didn't seem to matter, honestly. We didn't want to overtrade, and we are also a big believer in monthly cycles and the importance of changing months. So month makes sense, and we did test. I think we tested 2 weeks as well, and all we got was more work, not better results. So we stuck with the month. Mark, thank you very much for the idea of looking at backtesting stuff at premiumdata.net. I will definitely check that out. As you can see, if this is the first time that you've been introduced to MarketGauge, we're big advocates of systematic trading. Now, let me be clear. I love to read the charts too, and I have many different ways I trade, ranging from day trading, well, nothing's completely discretionary. I always have rules, but some of my trades are completely automated, and some of them are just rules-based, discretionary. So this is just one way I trade, but we definitely love the pleasure of being able to be completely systematic. Do you attempt to be tax efficient? Honestly, DW, we don't focus on the tax efficiency of it. We don't. That would complicate things, and from a backtesting point of view, we didn't do that. And our take on that is we're so dramatically outperforming the market that we're not nothing against trying to be tax efficient. But for us, that would be complicating a system that works just really well. Right. All right, I think I've answered all the questions. And if you have any more questions, you can always reach us at MarketGauge.com. At the bottom of every page, we have a live chat. If we're not online on live chat, you can leave a message there. It gets converted to an email. You can also find our email address and our phone number at the bottom of every one of our page. Harry's question, why not enter trades 3 days before the end of each month? The market tends to rise then to the start of the month. You know, Harry, I guess if I had the data that suggested that made sense, I would say that was a good idea. But I don't know that pattern. I don't know that it is statistically robust enough to change the system. But maybe you're onto something, and maybe I should take a look at that. Once you're in, so hey Tom, how are you doing? So Thomas has a question, and he's saying, how good is the $97 a month for? One of the things we, I would say, pride ourselves in MarketGauge about is that if you get a price from us, your renewal price will never be higher, all right? That doesn't mean we don't raise prices. We definitely raise prices, but we don't raise prices on existing subscriptions. So if you get into this now and you pay $97 a month, you will pay $97 a month for as long as you like. We will not raise that price on you. Do we auto trade accounts? We do not auto trade accounts. We do have a sister company. However, I'm not allowed to promote that on these webinars. But if you go to the bottom of any one of our web pages in the footer, you can find a way to contact them. Now, that is an asset management firm that uses our models, but you have to have a conversation with the licensed financial advisor at that end of the phone. All right. Well, great. You guys have been a great audience. I know that I know 10:30 was my cutoff time, so I'm expecting Dan to come on at any time with the hook and say you're done. So if you've got any last minute questions, I think I've told you how to get in touch with us. I really appreciate the time. Please go check out. There's more information. You can see the equity curve and more data at marketgauge.com/MarketFest 2017. As I said, this is limited time. It's going to expire. I'm going to say within 24 hours. I think we give you 24 hours after today or something like that. All right. And with that, I'm going to say have a wonderful day. If this is the first time you're finding MarketGauge, I hope it was a great learning experience. We've got a lot of good stuff at our site as well. Thank you very much, everyone.